All right, so I suppose we should get going. Good morning. Welcome to our daily Forex trading strategy session here at the London Lunch. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex, energies, metals, indices, and binary options. It's 2 hours before the New York stock market open. Hoo-ha! Good time to realign our satellites, sharpen our swords. Namakobi! Cool. I'll be your commander-in-chief for the day. Let's get going. A lot to talk about, but I have to remind you that the stove is hot, and if you touch it, you might burn your fingers. Yes, believe it or not, you can lose money in Forex. You can try to measure that risk by looking at past performance, but it's still not indicative of future results. So this risk might not be appropriate for you. Be careful, my friend. Okay. Yes, so let's talk about, we'll start with the fundies here. What's come out? Well, the RBA minutes. And how many people actually read the RBA minutes? I think I begged you yesterday, didn't I? Didn't I? I'm like, it was almost like insulting. If you didn't do it, I was basically insulting you, right? Because trying to stir up some sort of emotional response like it, right? You know what I'm talking about? I said, look, if you consider yourself a professional, you'd certainly read the RBA meeting minutes, right? When a central bank that controls the value of one of the major currencies gives you their outlook for you're gonna read it, right? Oh no, Wayne, I don't have the time. I want to be a millionaire, but I can't read the meeting minutes. Right? Remember all that? So I imagine a lot of people didn't read it. And that's funny, isn't it? It's funny in the sense that we're potentially the best of the best because you guys certainly care about your trading future and your trading career and stuff. And you're here for advice and guidance. You received advice and guidance, and still, it seems like 90% of the market still wimps out. Amazing. So maybe this time it hits you. Next time you'll read the RBA minutes or whatever central bank is releasing minutes. I'm just trying to spur any way I possibly can to help you become a better Forex trader. That's all. So again, but then maybe I'll speak to a different part of your brain, and so next time you change your behavior. Right? Sometimes it's a carrot, sometimes it's a stick. But anyways, this is the meeting minutes from the most recent RBA meeting. And at the meeting, they discuss things like monetary policy and global outlook. They started by reviewing economic conditions globally, from the Fed to the ECB to China. It's all here, yo. Look at that. I think just reading that is an education in itself. I mean, seriously, way better than any blog post you're going to read somewhere. This is pretty serious stuff by really smart people, but it's in pretty decently, layman's terms. And they talk about some very significant factors that affect what we do. Seems to me that's good read. Then they talk about Australia specifically. Things like how's consumption and expenditures and savings rates and employment and, you know, the housing market and conditions, and they break it down even by city, you know, just very, very interesting. Then they talk about the financial markets, which again is not just monetary supply, but things like credit and its availability. But you know, they talk a lot about, you know, what's going on in Canada and New Zealand. What? Really? Well, that's really interesting if you're a foreign currency trader, right? They talk about Chinese, the Chinese and the renminbi specifically. So this is all like foreign exchange stuff. They're talking about Greek banks and ECB monetary policy. And it, I mean, just fascinating stuff, isn't it? I mean, it should be, shouldn't it? Yes, it shouldn't. No, wait, no, it shouldn't. So yes, it should. Yeah, I'm not very good with my double negatives. Okay, and then here's their considerations for their monetary policy actions. I mean, just that in of itself should be fascinating to someone that wants to become a professional Forex trader, because they talk specifically about the value of the Australian dollar, where it's going to be in the future. Whale oil B. Okay? And then they say, oh yeah, we're going to keep interest rates the same. That's what gets written in the newspaper, right? Right. Here's what Reuters does. They go like this. They go copy, paste into the Reuters feed that goes on, I don't know, Yahoo. And then here's the title. Copy, paste. Now you got your Reuters feed. Now you're educated. No, you're not, yo. So again, I'm going to try to appeal to as many parts of your psyche as possible. I would really like you to take your trading as serious as possible and read things like meeting minutes from the major central banks around the world. There's not too many of them, and these come out not that often, right? Takes maybe what, 10 minutes of your time? And I honestly believe over the long run, it will have a positive effect on your trading and your career in many ways, not just pips, not just planning, not just thinking ahead, not just understanding global macroeconomics, but even later on, things like talking to potential clients to invest in your trading program or your fund, that just so that you can just talk intelligently. Because when you become a pro, it's much more than just making pips. That's the easiest part, right? So I plead with you. I throw myself at your mercy. Will you please read things like the meeting minutes? It's not going to hurt. So read that. They're fairly neutral. There's some very interesting stuff discussed. They're not necessarily going to cut again, you know, soon, but they are several times talking about how economic conditions have improved, and very often it's partially at least partially a benefit of having a weak Aussie dollar. So they're not saying no. And wouldn't it be interesting to find out, you know, what they do at the next meeting? Do you think they'll talk about the revaluation of the renminbi at the next meeting? Could it possibly change their opinion? Well, if China's devaluing their currency, should Australia maybe lower interest rates? So that's another thing. at the next meeting that I think will be of interest to you. I think we could learn from something like that. Okay. And then it's not on here anymore, but of course we had the CPI data out of the UK. And let's talk about pound, baby. Let's talk about GBP. All right, let's do this. Okay, there's the result. And the number was 1. The loneliest number, 1. 1% year-over-year inflation in the United Kingdom. Oh, very good. Oh, so very good. Very, very good. 1%. Bravo, bravo. Bravissimo, right? You know, like I said earlier today, it was sort of like a blurry eye in the valley of the blind, right? But here, about 2 weeks ago, I did a video in one of these sessions here, and it's on youtube.com/c/TradersWay, where I talk about how to know when the Bank of England is going to raise interest rates. Specifically, like how you're going to know, right? And what, and more importantly, why they're going to do it. And the same theory is starting to trickle in on some of this other data. Do you remember I discussed that there was a bad GDP number early in 2014? That's month over month, Demeter. Okay. I'm talking year over year. All right. So, yeah, so we talked about that, and that we need to go through the cycle so that we look at the last year of data. The 5th data point gets dropped, and you're only looking at the last 4 quarters, right? Or if you're looking at a monthly data, and they're looking at year over year, they're measuring the last 12 data points. Number 13 drops off. So there's a bad number sitting in the UK data. In particular, what I discussed is GDP that needs to drop off. Okay, a negative GDP. That needs to drop off. Then they're going to add a positive GDP to the number, and all of a sudden, boom! Inflation's going to skyrocket in the UK next year. Now, of course, we already know that's already happened. That's the problem with economic data. It's already happened. It just hasn't been reported yet. But we're smart money. Genius, genius, genius. Right? We're already smart. We already know this. We're already ahead of the curve. And it's kind of interesting to see this jump here. It's a pretty good sign. It's a really good number compared to what they've been having. And I think it's proof, or let's say plausible evidence that some of this old bad economic data from early 2014 is starting to drop off. Okay? But here's the other food for thought here. Commodity prices are way down. Whoop. And now they've printed a half decent number. Now, of course, it should be closer to 2%, but let's just say, even in a normal, healthy economy, if commodity prices drop by 50% practically overnight, wouldn't that print poor GDP or poor inflation numbers? And 1% is pretty pathetic. But when it's been negative forever, for years, suddenly 1% looks pretty good, right? But historically, 1% would be quite disappointing. We'd be worried about it on the way down, but our trend is on the upside, so it's quite good news. But think of it that way relative to everything else. Somewhere in the economy, they're producing a pretty good level of inflation. And that level is being diminished by low commodity prices. And remember, it's the velocity, right? So it's also low and prices were high, right? Oil was 100 and now it's 40. Whoa, that's a big drop. And it happened really quickly. So it tweaks the numbers a bit, right? But despite all of that deflationary pressure, they're still printing 1%, which on our planet right now is pretty good. I mean, it's actually quite good. So, you know, I'm being a little facetious, but hey, good job. But Carney already told us this. Do you remember 6 months ago? Carney's like, yeah, the numbers are going to be bad. Don't worry about it. Don't worry about it. It's there. I know the inflation's there. Remember, I made a big deal out of that, a big stink. We talked about it for weeks and weeks and weeks. Carney is not a guy to just kind of say, don't worry about it. Think of it. He was such a good central banker that Canada never really entered the subprime crisis. They had counterparty risks and stuff just because the rest of the world was tanking. But Canada was never really in a problem because he was so conservative and dare I say, smart. What was that rate, eh? And then take it even further. He's so smart and so successful as a conservative central banker that saved his nation from financial ruin like all other, major currencies, that the Bank of England hired him. Holy what? So this guy, he ain't no fool, right? Mama ain't raised no fool. And so he comes out and the numbers are pathetic and everyone's like, it's the end of the UK as we know it. And he's like, don't worry about it. The inflation's there. You just don't see it. Don't worry about it, huh? And he's right. It is there. And now we're starting to see it, even with bad or with deflationary pressures. There is inflation somewhere. So imagine this now. Like let's say you had a model. You're a financial analyst, right? So let's have scenario A, scenario B, scenario C. That's how you do an outlook, right? And then you would attach a probability to each one, and then you would, I don't know, if you were pricing bonds or something, you would use some sort of time valuation and risk adjusted, and then attach a percentage to that, and then you'd average all that out, and you'd get your value, right? Simple, easy peasy, lemon squeezy. So what if one of the possibilities in your model for the next 12 months was a quite decent improvement in commodity prices? What if oil went from 40 to 70 in the next 6 months? I think that's a reasonable possibility. I mean, we were at 40, and where did we go? 62. But let's just say that that's reasonably plausible, right? We almost did earlier this year. If it double bottoms, then it should make a higher high. I mean, that's what we should get. Probably not $80 oil, but we could go up and tickle 70. What would that do to the UK numbers? Now you're starting to get it? So what if there's a 33% chance commodity prices stabilize and go up? Now 40 to 70 in a short period of time is actually, the velocity of change is great. And it probably would happen in the last, few months of the year. Okay? And that would really print some decent numbers. Let's say, I don't know, January and February, we'll start looking at what happened in November and December. Right? You see what I mean? You'll see a trend of improving inflation in the UK. More and more people talking about the Bank of England raising interest rates. And then what happens? we get the new GDP numbers with that giant drop off. And then we add a pretty good GDP number at the front end of the value of the calculations, and wham! Huge surprise! Everybody's gonna be freaking out. Oh my God! Nobody saw this coming. I hear this all the time on TV. I'm like, really? Should have talked to me because I got it figured out. So, anyways, boom! It's going to be a huge surprise, giant GDP number with some front running of improvement in month over month and year over year CPI along the way, getting people talking about it. Boy, oh boy, oh boy. And we're on our way, right? Nice. So what do you think? Did we get out of the range? Okay, now remember, I said be prepared for breakouts in the third week of August. I told you that in June. How many people say that that's a fact? That you knew in May and June that I told you that third week of August, we're going to start getting breakouts. I mean, it's just like simple, right? Just absolutely brain dead simple. All right, is it the third week? I mean, are we close? Are we going to split hairs over this? Or are we going, well, Wayne, the 18th? I don't know. I was kind of thinking about the 23rd. I mean, like, what? Yeah, close enough for government work, right? Don't worry, if I'm wrong, I'll just revise it. Good enough for government work. It's not like I'm going to get fired, yo, right? So anyways, yeah, so I hope that is an interesting overview of the game. There's my almost month by month overview of the Great British Pound and what's going to happen in the future, and it's going to be a shocker. And we had to actually go back because it was even this earlier rally that we were talking about. Yeah, it was like here we were talking about Carney and the British Pound. Right? It was early in the year. I think it was April or May. So I go back and I look at this dip and I'm like, yeah, you know what? This is Carney right here saying numbers are bad, but don't worry about it. Was help me remember, was this also the IMF report? It was, wasn't it? Like, yeah. And how many weeks did I prepare you for that one? Like, is 6 weeks about right? Yeah, it was, I mean, yeah, like it was like a 2 or 3 month projection, right? Cool. So again, I'm just for those that are sort of newer to these webinars, sometimes we do talk 2, 3, 4, 6, 8 months in advance. And you know, it's amazing how you can walk away and forget. Yeah, Ron, and notice it flipped right in there too, right? The second week of April. Because you can see this is the 17th and it's already way high. So, I mean, but I think we did a lot of jokes too. I'm like, I don't really like picking bottoms. It's a strategy that stinks, right? We had lots of jokes in here. So, Alex, well, it's true, but it's something that can be remembered, anyways. Look where we were, hoy vey, huh? So cool. So there's the fundies. It's good to put them there because um, you should know why the market's moving, right? I mean, it's helpful, right? When I say, all right, well, in 6 weeks, we're going to get an IMF report, and it's going to be important to the market. And here's why. Here's why first quarter GDP in the UK is going to be a surprise to the upside, and why the UK is, why the British pound is going to appreciate. And why, more importantly, the Bank of England is going to be the second of the major central banks to raise interest rates. Boom. Okay. And then we'll trade the 5A cross and the Fibonacci retracement. Fine. 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 We'll do it. All right. So would you consider that a higher high? Okay. So you got a couple of places where you might want to buy. This jumps out at me right away. I'm also going to draw a fib. It's going to come down, and then we're going to buy it, and it's going to go up. There you go. All right, Coolio. Come along and trade honor. Fantastic. So, yeah, that's kind of where we are, where we're buying. My mama told me you can learn a lot about a market by its candles, where it's going, where it's been. Do 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 do. Okay, isn't it interesting? A couple of things going on here. Monthly central pivot point. Right in there, huh? How cool is that? So let me explain what's going on here. I've taught you over the years that way you trade a breakout is let it break out, let it come back to the scene of the crime. What used to be resistance should now be support. And you need to define, are you going to play this? I'm playing it a little lower. I'm throwing in a pivot point. I'm throwing in a 382. Whatever. Make a decision. And I'm just that's the basic theory. Let it break, let it pull back, long and gone. It's just a breakout strategy. Okay. You can play this beast if you want. Let's pull up the Widowmaker. Whoop, whoop. I got a whoop, 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 whoop. Yeah. Nice stuff, huh? In fact, mine kind of goes all the way back to here. So let's look at it from here. Good. Would be remiss not to do this. Should be careful here. Looks like we're heading up to the either the reversal pivot or the reversal zone. Still a lot going on here. I wouldn't call this a massive breakout yet, huh? We're rolling over off the 195. Yeah, it's one of those ones where I don't mind, jamming the stop and getting out of the way. Yeah, I could say without any problems, the pound yen by far and away has been my most successful and horrific currency pair throughout my trading days. But the pound yen has been fantastic at times over the years. Just fantastic. Just absolutely fantastic. And then you have a day where you decide you want to do it, screw everything up, and oy vey, those are also the days you remember. It seems to me every day I remember is a pound yen day. For very, very good reasons and very, very bad reasons. Yeah. Very good fun times. Happy fun times. Yeah, so, set it up, decide what you're going to do. It's not as clear of a breakout, is it? Do you guys ever trade pissy? Let's pull up the pound Swissy. What was the trade plan we had set up? Isn't that nice? We were up here. I had suggested it would come down, touch the tops, and head back up. What do you think? Look at the oscillator. Helpful too if you're trying to make a decision. I was having a conversation with someone just a day or two ago, and they were telling me that if the MACD was falling, they were a bear. That's not true. Shouldn't be. Nope. So I want to just get my drawing tool here, and let's talk about this for a second. The MACD, otherwise known as the Mean Average Convergence Divergence Indicator, is measuring the distance between two moving averages. My settings on the MACD are 21, 55, 8. What are your settings? Demeter's like the same. Cool. Same. Well, we don't know if it makes a lot of sense. Let's talk about it. Come on, guys. How many people are using default settings on their MACD? Come on. Don't be shy. I don't use MACD. Okay. All right, so let's talk about it. Okay. The reason I use 2155.8 is what it's doing is measuring the distance and even angle of the 21 EMA versus the 5 EMA over 8 periods. So I use, when I'm using my moving averages, I use the 2155 EMAs together to represent general market forces. Market. Marquet in France. All right. Okay. So that's what I use the 2155 for. Okay. I'm just there. It's telling me what direction the market's going and how quickly it's trying to get there. And when I use my MACD, I want it to study the market conditions. So I changed the settings from the default settings to 2155 because I want it to look at the 2155 EMAs. That's all the setting is doing. Okay? You say, okay, MACD algorithm, I want you to look at the 21 and 55 EMAs, and I want you to measure those two moving averages over the last 8 periods. And then tell me, are the two moving averages diverging or converging? And Gerald Appel, the inventor of this, MACD, named it the Moving Average Convergence Divergence Indicator because what it's doing is telling you whether two moving averages are or diverging. Very good. Thank you, Gerald Appel. Thank you. Oh, I'm sorry, Mr. Appel. Okay, Coolio. So that's why mine are set because I know what it does and I want it to help me measure it. So the big thing here is when these lines move above the histogram, this cross simply means the 21 has crossed above the 55. And when it crossed below the histogram, it just tells me the 21 has crossed below the 55. Okay? But here was the cusp of the conversation. This trader was telling me that MACD crossed and was falling down, so he was a bear, or he said you should be bearish. I'm like, oh, I don't agree with that, because all it's telling me is not to be bearish. It's just telling me that the market is a little less bullish. The 21 is above the 55. The market's still going up. Just at the moment, it's not going up as fast as it used to. It's retracing. It's just retracing. Yeah, I would say losing steam, right? But another way of saying it is it's just retracing. Isn't that normal price action? Price went up, made a high. It's going to come back, hit support, and then go long again, right? So this drop in MACD is really just saying, yeah, we're retracing, we're retracing, we're retracing. And I would say this is actually a bullish signal, and this is a take profit signal. This told you to be a bull. This told you to get back in, right? Because the 21 is now accelerating up and away from the 55. So once again, this says you're now confirmed to be a bull. This says you might want to consider taking profit. This says get back in. And that's a big difference from saying, you know, bearish. Well, it does mean not up at the moment, but it doesn't mean down. There's a big difference, right? Not up and down, two different things in the trading world. And so when you put the MACD together, okay, bullish, retrace, bullish. Bada bing, bada boom. Well, White's saying this is why, you know, multiple time frames and fractal geometry and all that kind of stuff. Right, because inherently MACD is going to be lagging. But if you use it properly, it's just telling me one simple thing. Is the 21 getting closer to the 55 or farther from the 55? That's helpful. And it doesn't have to be instant. I mean, I'm measuring just the last 8 periods, so it's not that big of a deal. It's not that lagging, but it's informative to me if you know what it's doing. Now, amateurs, of course, are buying, selling, buying, selling, buying, selling, and they're always going to be a little bit late because it is a lagging indicator, which means they're going to be very profitable, nor are they going to be consistent. Because sometimes when they sell the MACD cross down, they make a lot of money, and sometimes they sell it and they don't make any money, and they don't really get it because they're doing it wrong. Also, remember, a lot of things that you're reading is wrong. Isn't that frustrating? Have you noticed that? A lot of like training courses that you might have taken or books that you would have bought, and they give you this fabulous strategy, and then it just doesn't work. You're like, what? This sucks. And you're like, it does suck. So, you know, it's better just to be informed. So I was talking to, here's another conversation. I was talking to another trader who just read, because the strategy where, like when you reversal pattern, and he was reading on some website that was teaching him the reversal patterns. So he's like, Wayne, I just read this thing where it said when you get a double top like this, you know, that's a double top. I'm like, yep, that's good. That's a double top. And I should sell here. What idiot would do that? I'm like, that's just absolutely, completely stupid. There's no way that would ever work. And you know, I've thought this forever, right? And I've even heard worse one than this. The worst one is when you get the advice of, there's the neckline, now you need to wait for 3 full candles below that break, and then you have confirmation and you short here. That used to be common knowledge. And let me tell you, the only thing more stupid than the first piece of advice was the second piece of advice. Oh, holy smokes. So yeah, you got to be really careful. So I'm just saying, you know, a lot of people have been taught to trade MACD improperly, and maybe you got sold a course that said, you know, oh, MACD is great, so sell when it crosses down, buy when it goes up. It's nice and easy. See, look, here's 9 examples of how it worked. Now you can be rich. And you know, yeah, I mean, it's scary. But Yeah, just talk to a trader, not to a blogger. So, hey, maybe we should just talk about it. If you have a double top, first of all, you should already see resistance. So you already anticipate a double top at this point. You're already ready for it. And then when you observe it and it hits resistance, and maybe the oscillators are overbought, you drop into a smaller time frame and observe it roll over, so you short it. That's how you do it. But if you miss it down to the neckline, you let it break. And if it does break, you wait, let it retrace, drop into a small time frame, observe it roll over, and now you sell here. Okay? Which is not too dissimilar from the idiot that told you to sell here, except you got to sit through the pullback, and we all know you're going to jam your stop. Okay? So, good trade, good trade. Cha-ching. All right. Beep. So, let's move on.com. Anyone? Let's do USD yen. My only friend, the yen. I'll never trade Swiss franc again. All right, so let's see what plans I've already done for you. We have one plan that has us pointing down from here, and another plan that has us pointing down from there. A little bit of consolidation, huh? Yeah, what are you going to do? And this is very common for this time of year. I swear to you, I was long some yen pair last, but I was long. Oh, I'm not kidding. 6 or 7 weeks. And I think I had a 50 pip stop and never got knocked out, but never made enough money to take profit either. Now, talk about beta risk on that one, huh? So it just, nothing happened. And I still think if this was your plan, it's a good plan. No reason to get out, no reason for loss, no reason to get out for profit. Nothing's happened for a week. Amazing, huh? Go to a daily, and that divergence is still working in our favor and producing the double top. But it's not really doing much quite yet. Like I was hoping we'd be down here. And no, we're still on the 21. It's not really going up. It's not going down. You know, I don't know. I think sometime between now and next week, we might have an opportunity to know better. So if you're anticipating a move back up, okay, what you're anticipating is a move like this. And that tells me on the 4-hour, a failed up move, a drop to the downside, and then we buy. And that'll take 3 days. Does it feel about right to you? So it's going to do this, 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 and then longer on the daily. And the daily will now look like this. Zoop, 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 zoop. And this will kind of probably just fizzle down to here, and then boom. How does that sound? Perk asked about holding positions with negative swaps. Well, how long do you want to lose money? Thank you, Kareem. Building permits are fine. Right? What isn't priced in on that? Do we have a trend? Yeah, everything's been priced in. So did you hear about the RBA? What did the RBA say about the Fed meeting? Well, I guess you should have read the meeting minutes. Can you picture what will be? Do, 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 do. Desperately in need of some stranger's hand, you know. Desperately. Oh, let's see. I think it ended with the word Asia, so that's what I'm looking for. Here it is, Asia. The board's discussion of financial markets commenced with a focus on the U.S. Federal Reserve's monetary policy. While policy was unchanged at the July meeting of the Federal Open Market Committee, recent commentary from Fed officials continued to suggest that policy tightening could start at the September meeting, whereas financial markets had only fully priced in a rate increase by December. Members noted that when the Fed actually delivers its first interest rate increase in 9 years, there was likely to be a sizable market impact, notwithstanding how well telegraphed the change in policy had been. It is likely that the financial market volatility would increase and the US dollar could appreciate further, including against the Australian dollar and a number of other Asian currencies, or other currencies in Asia. Holy smokes, that's only one paragraph that you didn't read that was so unbelievably important. Yeah, don't read it. If you want to be a success, don't read the meeting minutes. If you want to be a successful Forex trader, don't read the meeting minutes. Whatever you do, don't go to the rba.gov.au and actually start doing macroeconomic research. Don't do it. It's going to hurt you. Don't get too smart. People don't like smart people. Smart Alec, huh? So anyways, I think this is already priced in.
The line has starts and building permits in just a few seconds.
TradeTheNews.com, baby. TradeTheNews.com.
Starts 1.21 million, above 1.18 million expected. Back month rise up to 1.2 million from 1.17 million. Permits 1.12 million, well, the 1.23 million expectation. Back month rise higher to 1.34 million.
0.2 versus 1.18 expected. Holy smokes. No, I would say, with trend. Okay. Like I said, we got a well-established trend. What would change it from being off trend? It's all priced in. This just gives the green light for the dollar to be strong. That's fine. But, you saw like the dollar index is at a 618 Fibonacci retracement, right? So it's likely to at least on the short run get some strength. At least I hope. Oh, it got kicked off the Daily Central. Very interesting. Okay, I'm watching it minute by minute on a different computer. But yeah, Dixie actually got severely rejected at the Daily Central. As soon as I said it, boom, massive rejection. Exactly Daily Central pivot point. Very cool. Well, so we'll see. And when that happened, the Canadian dollar made a low. Very interesting. Even the Canadian dollar's fallen down. Down, down, down in a burning ring of fire. I go down, 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 and the flames get higher, and it burns, burns, burns. No, see, what I was saying is irrelevant. It's already priced in. There's no surprises. There's no nothing. We're going to sort of just whip around, hit our stops, hit our orders. Market will just quiet up again. There's nothing interesting with the results. It's all on par with average. So here's an old trade. That one did not work. So we're in here now. So I don't think it's a great move anymore. Let's kind of look at it this way. I think there are bulls threw down an order here because it was the only place they could. There was nothing left as a bull. That's a 786. But also bears have sold their 786. So I'm trading this as range bound. That's the moment, as they say in France. It's interesting. I got a box there going. How could I even possibly draw a box that big? Oh, that's why. All right, so that is interesting. We had to go back to 2008. I forgot about that. Boy, Canada, huh? Seems like Canada is going to get poor again. Was that right, Ron? Yeah, well, sign up. It'd be nice to see you there. Cool. And I'll have my new computer by then. I ordered it. I finally made a decision. It's in the mail, so they say. All right. So, anyways, I think you see what's going on, right? Sort of a range thing going on here. And if it eventually breaks out to the upside, so let's say it does, I don't know, maybe not even test the bottom of the range. Maybe it does this. If it does that, this zone here, which I'll recolor a different color, resistance from 2008 that now might become support. And Canada gets really poor really fast. Okay, dollar index retesting its daily central pivot point. It's going to give it another good old college try. What does a trading computer need to have? Actually, very good question. Actually, very little. Actually, very, very little. I'll give you an experience, and it doesn't explain why I just did what I did, but I suppose it's human nature. But there was a time when I spent $5,000 on a trading computer, and it was ridiculously awesome compared to, I don't know, other computers at the time. And I noticed it wasn't any better than my super cheap computer. I thought, well, that's funny. Maybe I don't need a $5,000 machine. It's kind of funny when you get that, like, moment, right? So you need very little because there's no processing power required to run an MT4 platform. And then you don't need a unbelievable graphics card because we have two-dimensional graphics. And so let me open up this chart. It's a 4-hour chart, okay? In the course of the next 4 hours, how many pixels are going to change? How many pixels would change? 4? 1 per hour? So you don't need much, guys. You really don't. So like, I'm going to sell, I have 3 computers right now. I said I was going to sell one of them the other day, and then I said it wasn't. And, oh, okay, I'm going to sell them because I bought this new one, so I don't need these other ones. I'm going to sell them for like $500. I think is reasonable. A Windows 7 machine runs 6 screens. I have MT4 installed, and I downloaded Chrome. That's all I've done over the last 2 years that I've owned these machines. I installed MT4. That's practically a perfect, clean PC. And that's all it is, but they're like dual core. I think they only have 4 megs of RAM. They run 6. at reasonably high resolution. I mean, high def, right? They're all 1080p. And I've been using it for 2 years, not a problem. That's it. That's all you need. So if anyone in America wants to buy one, it'd be super easy to send it to you. I think DeBeasta wanted one, but I got to send it out to Nepal. But, you know, easy. So if nobody wants them, I'll do something. Maybe I'll ask FX Street if I can post an ad, get rid of them. Because I figured there's traders that want them, and if not, I'll just donate them. The memory, like I said, 4 megs is enough. How about this? Okay, what do I do every day on this computer? I have 6 screens. I host webinars, and I'm running Camtasia Studio in the background, which is a massive video editing software program. I'm running multiple versions of MT4. I got my email. I got various websites open, right? I'm doing a plethora of things, not to mention a live webinar on top of it, right? So what do you need? Do all of that and, right? And trade? Let's see. What do I do to pull up the stats? System and security, isn't it? Hang on. Review your computer status. Is that it? No. Backup power. Windows update. Check for device measure. Is it system? All right. So this is what I have on this machine. Oh, okay. I got 4 gigs, and I'm running a 2.5 gigahertz dual core processor. That's not impressive, right? That's not impressive at all. But it's way, way more than enough than what you need, right? And so, yeah, so I got a couple more that have never been used for anything except MT4. Right? And then the way that I set up the boards, yeah, I had an error on this one, so I ordered a new video card. It's on its way. But they're set up in a vertical situation, so I have 3 6s. So that's all you need. You know what I mean? And that's you can trade with and record videos and host webinars and have 5 websites open and have 3 or 4 different MT4 platforms running and streaming real-time news on top of it. I mean, just ridiculous. So you don't need to go out and spend $5,000 on a computer, okay? You understand? So that's my response. Tulani, okay? You don't need too much. Now, my trading computers, like I said, I don't do anything on them except trade. So I boot them up on the desktop. It'll have my MT4 logo. I double click it. It opens up and I'm done. Yeah. Yeah, good question, Ron. Has anyone updated to Windows 10? These Windows 7 machines, I got the message. They're ready to upgrade to Windows 10, but I dare not do it because I'm worried about the video drivers, or the drivers for the video cards, right? So I'm worried about that. Okay. Is that right, Mike? Yeah. So, Debista, do you really want me to send one out your way? It's like, so I have the two Windows 7 that runs 6 screens, and I have one Windows XP that runs 8 screens. I've never even used the XP one. It weighs like it feels like it weighs 50 pounds because it's a server. It's not a PC, so it's heavy. Beautiful machine. Anyways, let's move on.com. So there's your. Are you trading the lower low? I guess is the question here. Right, depending on time frame. I'm trading pretty conservatively right now. I'm kind of waiting for bigger breakouts, but you know that's typically how you trade a lower low after a lower high, right? So it'll find support here. It'll come up and then maybe back down. But here's what's happened to me the last, I don't know, week or so. I get sort of like this, and then I get this. Am I the only one? Right? It's amazing, huh? So I don't know. I'm a little cautious. I'm allowing over the next few days. I'm allowing the market to wake up and slowly start breaking out, and then building positions and stuff. Right. So like, I would rather catch USD yen at 22 than 24. But you know, I might not have that luxury. So. All right. Any last questions? It's been approximately 75 minutes. What am I using to draw on the chart? That's Camtasia Studio. Okay. And this takes an incredible amount of processor speed. And I'm still doing all of this on my dual core. So any positive interest rate differential would be considered a carry. But most importantly, what you'd want to do is create a basket. And you would start with the highest carries first and work your way down, because you're going to want some sort of diversification over the course of time, because you're going to be in the trade for a long time. So you want to diversify as well. Chaba, what do I have? I believe my server is a Dell, and the two PCs are HP. But you know, you ask like you know, what brand is it? Well, very often these are, you know, like my server is, oh, it's custom made. So it says Dell, but it's a Dell case most likely, and the motherboard and everything's probably custom, but it's a high-end server. So basically it's a Dell server. It's beautiful inside. Can you show me the flip on the USD CAD? Sure. What do you mean by the flip? Oh, the fib. Which one? Oh, this one that's drawn? Oh, I see what you're probably asking. Yeah. And you can see on this one it's irrelevant, right? Sorry. Thanks for pointing that out. Yeah, the only thing that's on here is this, right? Come on. There we go. I'm going to kind of look at it like this for now. I mean, we have a little thing going here if you follow the price action. There is something going on here. I'll wait and see. Okay. Right now it seems like we're drawing things everywhere, and we might be, shopping while we're hungry. So I think I'm going to ignore this and maybe buy it at 130.50. What do you think? I used to trade treasuries back in the day, and I found out something very interesting about living in the United States. The taxation system is terrible. Now, Forex actually is a blessing in the United States, the way it's taxed. If you're a professional, you have trader tax status, which is, you got to have all that verified and meet the various requirements of the test. But if you achieve trader status, the way that the government taxes your Forex business is fantastic. But you have to have a good accountant and a good lawyer, because there isn't actually a tax code at the IRS for those businesses that are in the business of making profits from speculating in foreign exchange trading. Weird? There's no IRS code. So when your auditors show up, they're not going to understand what Forex is, and they're going to be wrong a lot. And you're going to need an accountant and a lawyer to sit down and explain it to the IRS how to treat your business. It's almost similar to my NFA audit. When they were here, I had to explain the difference in certain situations, the difference between Forex and futures, because they were treating it like a futures contract. I'm like, no, it's not a futures contract, it's a spot contract. Oh, what? Well, blah, 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 blah. Well, let me tell you how Forex works. So very interesting stuff. So you gotta have it. So long story short, I was trading a lot of oil futures. I traded a bit of S&P 500 futures, and I traded 10-year T-note futures. Fine, everything's good. And then you find out there are completely different rules and regulations at the NFA, but there's also different rules and regulations at the IRS. And my taxation bill skyrocketed because we had to treat all of this differently. And I'm not joking, my tax filings, they're like a phone book. They're so thick. I'm not joking, like 100 pages long. My tax filings. It's ridiculous. So I'm like, no, I just trade everything through spot now, because it just makes my taxation just easier. It's just too complicated to have this trade treated one way, this trade treated a different way, and this one you have to pay this tax and that tax. You don't, it's lower. One's oh my gosh, it was ridiculous. So because I'm throwing away, I mean, many thousands of dollars on professional advisors to make sense of all of it. So I'm like, you know what? Nah, I'm just going to consolidate everything through Forex. The United States does tax Forex, but again, if you're a Forex trading business and achieve Forex trader status, my real tax level was ridiculously low. It was absolutely ridiculous how much taxes I paid. Like 5%, maybe, my taxable income. Oh, it was just redonkulous. And then one year, I screwed up, and we get this letter from the IRS. I'm like, uh-oh, and I open it up, and it was a $100,000 check. Whoops. Guess I got a tax refund. Never had one of those before. That's interesting. So just, it's because things get complicated, guys. It gets really, really complicated. And so, I simplified and just don't trade the futures market. I just trade the spot market. Any other interesting? So we talked about taxes, talked about computers, talked about macroeconomics, we talked about microeconomics, talked about some technical analysis. Yeah, yeah, Tim, they are spot Forex trades. Yep. So I'll see you tomorrow. I've taken 75 minutes of your life. I don't want to keep doing these two and 3 hour webinars. It's just not fair to people. So when you immediately upload the video to youtube.com/tradersway. Sorry, youtube.com/c/tradersway. It will be on forex.today probably within an hour. And in case you've never noticed, all my videos are down here. Look at how to know when the Bank of England will raise interest rates and why. Very interesting. So you can go back through the archive. How about planning for next year? Today. So there's some nice things. And what is it? What's the date? The 18th? And we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Only 9 trading ideas today on the website, guys. Only 9. Sorry, man. We're tired. But what an exciting site it is. Lots of people contributing trading ideas. And it's free. So thank you to Forex.today for hosting these webinars. Peace on earth. May the pips be with you. May your profits be above average. Yeah, Rod, very nice to have you here, buddy. Maybe we'll see you tomorrow. Okay. Take care. Bye-bye.